Howdy ho, everyone, and welcome aboard. This is the US session, Learn to Trade Live US session. Or is it? I'm not 100% sure if we've actually got a US session today. Certainly, we've had no other sessions due to the fact that the market's open, let's put it that way. But we've got bank holidays going on right around the world today, celebrating Easter Monday. And I hope I hope your whole Easter break has been a wonderful thing. Let me just get rid of that echo in my ear hole, and that's a whole lot better. I was listening to myself. Gee whiz, how do you blokes put up with it? Yeah, it's a bit like that, isn't it? I know. I guess you wouldn't be here if you didn't want to, and I'm very, very happy that you are, of course. G'day, John. I'm back in on the Aussie. Small risk and going well. Good man. Aussie, trade the dips, buy the dips on the Aussie, I reckon. Today is not the perfect day for trading, I've got to say, but if you can find a way in and it looks good to you, then go hard. Well, sorry, no, don't go hard. Go gently. But go gently. That would be my absolute counsel. That is for sure.
Hi, mate.
Hey, is Ash.
Hi, mate. Sorry, dude. I've had internet just knocked itself out. It was pretending it was working, but then it wasn't. So this PC relies on good internet. Everywhere else I can kind of rely on the Wi-Fi, but this has got to be plugged directly in. So I've had a bit of an issue.
IT, gotta love it. Just gotta love
it. yeah.
Idiot something.
Yeah, well, I was going to say when it's bad, it starts with SH.
It certainly does. And then you can add a bit more after that as well.
Yeah.
Mate, it is Easter Monday, and look, I've got to be perfectly honest. I've got absolutely no interest in trading. But do we actually have a US session? You said the US is trading, so I assume we do.
The US appears to be open. Yes. I don't. Let me just have a quick look.
Certainly no news on the radar, and that.
No, do you know what? It's quite. US stabilizes. CDC says 70 vaccinations in progress is the kind of virus update. Merkel's crisis stimulation is already seeping into effect, and I read earlier that Goldman Sachs says that US stocks have likely bottomed.
Oh, that's very nice.
Unprecedented policy support and a flattening viral curve have dramatically cut risks, the bank says, which is really interesting because I remember the financial crisis that we had last time, and it did take a while before the stimulus were coming in. This time, they just threw everything at it straight away. So I suppose if a V-shaped recovery was to happen here, then it would be because they've done everything that they did last time, but in a matter of a few weeks rather than over the course of a few months. So obviously the thing is going to be, if that doesn't work, then what? If
you just mentioned it before, SH1T.
Yeah.
Oh,
it could well be.
Yeah. I don't believe in the V-shaped recovery, I've got to say, and I don't think you do either.
No, I don't.
I can't see how and really, they've got rose-colored glasses on, these guys who are saying these things, in my humble opinion. And I'm not there. I've got to hasten to add, I'm not there. But from where I sit and the news that I hear and read and see is definitely not, I won't say encouraging, it's definitely not good news coming out of the States. And they seem to be embellishing whatever they can. And I guess I get that. They're trying to promote the good side of it. But gee whiz, it's a very, very thin line. That's the good side of what I'm seeing out of America at the moment.
Yeah.
And, that's kind of only halfway around the world. We've got the other half to go yet. So,
yeah. And also, there has to be a question of, number one, who's reporting it, and number two, why. And I know it's incredibly skeptical and maybe, I mean, in this kind of environment, you probably have to think like this, but it's a, I can't help thinking of Goldman Sachs holding on to a lot of positions they probably want out of. And if they can say that we've bottomed out, then people start getting back into the market, and then they can just dump out a load of positions. I mean, I don't know whether that would be legal for them to do that, but I always have to question, why are people saying what they're saying? And I don't know. I mean, I've not read it. I've not read the full report on that, and I'd probably want a few more commentators suggesting that we have bottomed out, or we just see it in the numbers. It's got to be sort of, ultimately, it's got to be data driven. And what I would suggest, what this does suggest, is that the S&P, certainly in the Dow, and the Nasdaq, may be unlikely to turn today, or less likely. Let's not say unlikely, but they're less likely to turn today. And actually, we do have some bullish momentum still carrying through into the S&P, the Dow, and the Nasdaq right now, where it is attempting to get back to the highs that we made on Friday.
Do you want to share that, mate?
Yeah, I can do, actually. Yeah, let me just show you. Let's do the screen share over here. Where's my got here? Oh, if you let me have the screen, that'd be great.
Oakley dokley.
Great. Okay. Yeah, this is that's still on the FTSE, but just looking at the S&P, the S&P, it did look a little bit negative today. It'd be kind of interesting to see what today's bar is. It might end up being something of a hanging man or a spinning top. Actually, it won't be a spinning. It could be a spinning top, but unlikely. But maybe a hanging man. But it's just the fact that it's come down, giving us a fairly negative 4-hour bar here, this engulfing bar here. But it's held, it's held in those places that we were discussing earlier on. So if it is to come down, it doesn't appear to be coming down in this particular session, and maybe we wait for the FTSE before anything is ready to happen. So the S&P is continuing to hold firm. Dow looks basically the same as the S&P. And the Nasdaq, which I'll show you quickly as well.
Yeah, show me the Nasdaq. Remember, I was going to try and trade that.
I do remember that one. Yeah, so this is the Nasdaq, basically the same. And it's interesting, mate, because I have to say the Nasdaq out of all of them is probably the most bulletproof. Because of which companies it effectively holds. It seems fairly bulletproof for in this particular era. So if the Nasdaq is coming down,
like, that's enough for me to be bearish.
Yeah. Well, if the Nasdaq's coming down, then it would suggest that the others are definitely on their way. But so far, it's it's holding firm. The trend is still intact to the upside. Let's quickly check oil as well and see what we got with that. But we haven't opened up just yet. We were looking at oil earlier on. We have broken down this area here, which looks a little bit ominous, but it might just turn us into a slightly different pattern. But it's looking scruffy. This could be a left shoulder. Oh, we were going to look at the pound Aussie and talk about trade lines as well. This could be a left shoulder. This could be a head. We could be looking at a right shoulder here. So if the right shoulder is inverted head and shoulders, if the right shoulder starts to form here, I'm sure there's going to be lots of people that are still interested, and that's going to put the neckline somewhere around about the 28.50 level or something like that. So we're down at 23 spot pretty much at the minute. So let's see if this holds up, mate. But that does look to be an area where we could start to carve out a right shoulder on oil. Now, the pound Aussie was something that, now who was it that was asking about this? They were asking whether they've seen a head and shoulders pattern on this. Now, we didn't ask them their time frame. Hey, JC. Hi, Lewis. Yes, John, was it you? Oh, no, it wasn't the Euro Aussie. Somebody was talking about the pound Aussie earlier. Hi, Helen.
I think Faye was asking about lines.
Faye was asking about the lines, but somebody asked if they've got the head and shoulders right. They said, "Well, I've drawn a head and shoulders. Is it right?"
Oh, okay. I didn't see
Let me
that one.
move that over there so so it's not so off-putting for you guys. Okay, if you guys remember, well, the person who asked will probably remember. Oh, it was Ravinder.
Ravinder.
Fantastic.
There you go.
So Ravinder, what time frame are we looking on? We're looking at Head and Shoulders on the Aussie. No problem, no problem. Have a look. It was the Aussie dollar. Sorry, the pound Aussie, to see whether we had a Head and Shoulders. Okay, well, aside from that, we can check that in a moment. We wanted to talk more about. Let's have a look at the Euro Aussie as well for John. And then we want to have a look at some trade and trend lines, mate, if that's all right. And then maybe we'll look at journaling a bit more
Sure
as well.
thing. And I repeat, guys, I'm not looking to trade the smaller time frames today, if anything. And the reason is because of, pardon me, everyone's on holidays. Maybe we do have a US session. Maybe we do have liquidity through the US session. But when I've decided to put my queue in the rack, I pretty much put my queue in the rack and wait till tomorrow. So that's pretty much where I'm at. I will give you my analysis moving forward, because I do think there's some good things we can take some opportunities with in the next couple of days. But as far as trading currencies today, probably not going to happen from my side.
Great. Okay. So 1 hour, is it creating a Head and Shoulders on the 1 hour? And then I want to get to this Euro Aussie for you, John. In fact, John, while I'm looking at this, can you just quickly have a think about why you are thinking about a long? What time frame? What level you're looking to bounce from? What setup? What fundamental reason? Doesn't matter, as long as we have it. Okay, so on the 1 hour on this, then you'll be looking at an inverted Head and Shoulders, and we were talking back here at the time, I presume, so we're a bit further on. So the answer would be yes. You could say that yes, you could say that that would be an inverted Head and Shoulders. It's complex, you know, that when you get a Head and Shoulders with two heads, if you like, or two bottoms of the head, they do call it a complex Head and Shoulders, because it's kind of got this double bottom aspect to it, which could turn into a triple bottom. So you may well just be looking at a kind of bearish channel down here, which also could be a bit of a bear flag rather than anything else. You know, you might be kind of looking at that. Now let's have a look at this on a longer term time frame. It does kind of start looking like a flag more than anything else, to be honest. It's a bit scruffy for the inverted Head and Shoulders. I don't know what you think about that, Jeff, but I don't love it. With the Head and Shoulders or inverted Head and Shoulders, you're really looking for a standout high in a Head and Shoulders, and then the lower high. With here, we haven't really got the standout low. You know, it kind of gets a little bit messy, and we're kind of back to that low again. And I appreciate that, you know, what you were looking at is a potential for it to form, which earlier on when you were looking at it, then there would have been a potential for this to stop, and that be kind of like our left shoulder. And yes, we could have said that would be like a head, and then the right shoulder would be in this area. So yeah, that would kind of work. But it's kind of getting a bit complicated now. It's getting a bit messy. This is, as I say, almost kind of like forming a triple bottom down here, if anything else. So that's kind of negating that. And you know, you kind of got that going on as well, which could be a channel. It could be like a rising wedge or something like that. It's a bit scruffy. But I'll tell you what, overall, what I am seeing is when I look at the 4 hour, is the potential for this to be a flagpole, and that to be a potential flag, and then getting a bit lower. The longer this goes on down here, the flag will start to negate. You know, you don't want too many bars making up the flag. 5 to 7 is probably around about right. So we're already getting a little bit long in the tooth with the flag. So the flag might get swept away as well. Now, that doesn't mean that we don't bottom out here, but it's not really a great inverted Head and Shoulders. What would look like a better inverted Head and Shoulders is something that did this instead, where you have this on the 4 hourly, where that's more like a left shoulder there, and this whole area is the head. And then we bounce up and bounce back to get our right shoulder to get to go again. And just one other thing on it, head and shoulders and inverted head and shoulders on an hourly, they are incredibly weak. You know, you may have them when you may be looking at them when you have everything else in place, but really the head and shoulders pattern should form on a daily or weekly or monthly, rather than the intraday. Cot reports, talk about teach about cot reports and seasonality. Yep, no problem. Jimmy, day one, sell tomorrow. Okay. We looking at all this, Jeff? You seen all these in here, Jeff? Actually, Jeff may have dropped out. Jeff may have dropped out. I'm not sure. We'll see if Jeff is there in a moment. He might have had the same problem that I've just had with the internet. Okay, let me see if I can get through these things here. Firstly, let's talk about.
No, the problem I've got is I've got to turn my microphone back on. Sorry, guys.
Okay. Well, how do you want to do this, Jeff? We got quite a lot to get through here.
We do. We better answer these questions, and then I'll get back onto the analysis side of things, and we'll even have a look at the journal if we get a chance.
Great.
What have I got to answer here?
So firstly, we got the inverted head and shoulders. I don't think there's there. I'm looking at just this thing with John. I'm looking at the 4-hour time frame. My thinking is the Aussie economy will be better placed to take advantage when the madness is over. Agree with that, but do we have a genuine setup to the upside? So the fundamental idea gives you what you want to do, but you're looking at this on a 4-hour. I am not seeing this turn around. You know, if this is going to turn around, then it's going to start to break through some levels and genuinely turn around, because this could keep going and going and going and going and going. So we just got to
John,
make
you're
sure
short, mate, aren't you? I hope you're short.
Oh no, he was saying about going long on Euro Aussie.
I don't think so.
Oh, were you short?
That's his name.
Sorry. Sorry, did I get that?
You've got to change your name, right?
Sorry, John. That is my mistake. What an idiot. Yes, you are absolutely, yeah, you're on it. So you're short. Yeah, sounds good. I think I still really like this Euro Aussie for a short. I think play it on the way down. Faye's asking right, let's get to Faye's next, actually. Sorry, John. Sorry. That is my idiocy, and yeah, terrible observation, but that's great. You're short. That's brilliant.
Early afternoon. Goodness me.
I know, it's not good, is it? So Faye, let's get to Faye, because Faye wanted you to talk about wanted to talk about the lines, and also can you comment on any Aussie pair? And John's, as we've mentioned, the Euro Aussie. Why don't we cover that one? And why don't we cover some of these other ones?
Absolutely.
Yeah, and then we'll get to Jimmy's as well.
I'm happy to.
Oh, and JC was asking about you to recalculate the win percentage, yep. Which if we get to the journal, if we get a chance to the journal, we will do that as well. So let me pass back to you. In fact, you can probably take the screen as you're in control, but if you need me to, I'll pass to you.
Yeah, I think I can. Just like that.
Yeah, I make you right, John. It is a concern. The Chinese economy is a concern, and that might start seeing us reverse in the opposite direction. But I suppose we don't really have a genuine snapshot of that until Friday, so we should be okay with our shorts for at least until then.
Okay, to answer the pound Aussie question, I can do probably everything that's pertinent to me on this particular chart. So let's go through that pound Aussie thing once again in the inverted head and shoulders. But before we do that, let's take a look at the monthly chart. Now the monthly chart here has hit a strong resistance level. You can't really see it with that line, but let me make that a little bit more pronounced. Okay, so anybody who knows me, knows how I trade, knows that I'm just about to talk about market structure, because market structure to me is the number one most important thing that we have to look at before we make a decision on which direction we're going to trade. So in this instance, I'm looking at pound Aussie, and the very strong signal I'm getting here is that we don't want to go up beyond this level at the moment, which is around about the 203-ish mark, 203.50 mark, maybe 204 even. It's a cloud of a price. It's not an exact price, but you can see how strong that level has been through, let's call it, what do they call that thing? The last time we had a very big correction, guys. Oh, yes, the global financial crisis. Well, this was all part of that. And here we are back here again, and we've had a double hit on it. Now, to me, that is a strong signal that we are about to have some selling. Now, how much selling, of course, is the biggest question that you could ask yourself. But when I looked at this chart a couple of weeks ago and saw this tweezer top sitting here at that level, I thought the very next opportunity I get to trade this short, I will, and that will be on the back of a lower high. So we were looking for exactly what we got here, a lower high. How do you pick that? Well, it's a little bit trickier than you would first imagine, but if I'm wrong here, and this is not the candle to trade, which is the one that we did trade, then I'm wrong. Because if price goes through here, it's going through here, or it's at least going to test that, and it's going to negate the tweezer top. So if I had to be wrong, it was going to be with this candle. So that's why I took the trade. Now, since then, what has happened? I'm on a daily chart here, don't forget. We have come back to the breakout level, if you like, that we broke out of to put in these tweezer tops, and it took the longest time to do that. But once it did, it broke substantially below it, also took out an intermediate trend line, and has now retested that twice. Now that to me is probably the precursor of what's to come next. And what's to come next, in my humble opinion, is this trend line here. So with that in mind, I go into this little section that we were talking about and see a consolidation beginning here. Now, when I look at consolidations, I do exactly as, who was questioning the head and shoulders? I can't remember. But what I see is not a head and shoulders here, but a range. I see a box range in front of me. So the very first thing that I do, and this goes to your question, Faye, the very first thing that I do is look for 2 equal highs and 2 equal lows. And as soon as I see 2 equal highs and 2 equal lows, here's what happens. I see a shape forming. So I put the shape on the 2 equal highs, and they can be the opens, they can be the closes, they can be the tails, they can be whatever I choose them to be by visual, right? So I've got the top here, probably bring that down a little bit to the top of that candle, and that coincides with the open and close of these candles here. But it's really putting a boundary fence around price, and that's the whole idea. So what I see now is not a place to go short on pound Aussie, but a place to wait until we get something like this, maybe a false break and a higher low, and maybe it goes to the top again. Perfectly willing to accept that scenario. But until we break through this market structure, which is the most obvious and relevant market structure at the moment, in terms of intraday trading, not longer term or intermediate term trading, but in terms of intraday trading, that's what I'm looking for. I'd be looking for this to either bounce off the bottom or break through the bottom, then come back into that range and give me a higher low. If that were the case, I'd be willing to trade it to the top of the range and get rid of most of the position at the top of that range. Then exactly the same thing applies. If we break through the top, I'll be looking for it to come back inside to trade it back to the bottom of the range. Of course, if it breaks out, then I don't get caught up in all of that mess that I just mentioned. So that's the kind of thing that I'm looking for at all times. But that doesn't trump what I see in the bigger picture that I described to you. And that bigger picture is very, very clear to me that we're coming off a very strong resistance level. We've broken through support, and we've mentioned this level many, many times because that was our second target on this trade. We've broken through there. We've retested it. So I see this as a definite trading opportunity short, but not from here. If you're not in this trade already, then in my humble opinion, you need to wait until what I just suggested may happen, does happen. And all intents and purposes, you'd be going back to the weekly pivot at that point, because it is a form of support level as well. So I'd be definitely looking at that as a potential. So can your inverted head and shoulders become a tradable opportunity? Absolutely it can, but it's only a signal. It's only a short-term indicator, if you like, that something may happen next. You've got to wait for that second thing to happen, and that second thing to happen, in my humble opinion, has to be a higher low before you look to trade it long. So Faye, to your question again, how do I find these lines or these shapes that I put on my chart? Well, as soon as I see visually something that looks like a rectangle, I look for 2 equal highs and I look for 2 equal lows. If we're talking about a channel, for instance, it's exactly the same. A channel to me is a range. Why do I say that? Because what a range is actually doing, it's forcing price from a resistance area to a support area. And when it gets to support, it forces it back to resistance. And when it gets to resistance, it forces it back to support, etc., etc., etc. That's what a channel is, and that's exactly what a box is. And that, in an absolute nutshell, is how I trade. Looking as soon as we get to here for a false break, and as soon as I get a false break, if I get a higher low, bang, away we go up to a resistance level. As soon as I get a lower high, bang, down to a support level. Nothing ever changes. That's exactly how I'm looking to trade the market at all times. Does that answer your question, Faye? And whoever was asking the question, I can't remember who it was, about the inverted head and shoulders, does that make sense to you as well? It was Ravinder. Sorry, Ravinder. I forgot who asked that question. Hopefully it makes sense to both of you. What else was there? For JC. Okay. Going back to the journal that we started earlier in the UK session. Okay, all you need to do to work out your win percentage on a particular trade is, in this case, for this trade, we entered the market at 1.2290 and we exited the market at 1.2294. So the difference between both of those numbers, the entry and exit, is 4 pips. Now it was positive, so we can actually take that 4 pips and call it a positive result, but a positive percentage is what we're after. So the percentage is the entry minus the exit, or sorry, the exit minus the entry in this case, as a percentage of our risk. Now our risk was entry 122.9, stop loss 122.05. So that's 85 pips that we risked taking that position. So entry minus stop loss equals risk in terms of pips. So 85 pips were risk, 4 pips were gained. So the simple formula is, hang on, I'll get a pen. Pen, come on. There we go. So the simple formula is the difference between entry and exit is 4. The risk was 85. So this minus this was 85. So we put 4 over 85. Which is what, roughly 1/20th. We multiply that by 100 over 1, if you like, or, no, we don't do that. We'll just, we'll divide, we've got to get the percentage somehow. Just do it on your calculator as a percentage.
Oh, well, won't the percentage easier. Just be 4 divided by 85 times 100? 85. Times 100.
That's what it is. So 4 divided, exactly right. And that will give you 0.005, right?
Pretty much, yeah.
or 4.7 or something like that. I
Yeah,
think it is.
4.7. Yeah, and then if you times that by 100, then you get up to 4.7.
Yeah, but we don't want that. We want the exact percentage, and the exact percentage is 0.005 or 1/20th, if you like. Is that right?
Of the
That's
win
right,
rate.
isn't
Yeah,
it?
yeah.
Yeah, that's right. So that's exactly what we're looking for. Is that okay, JC? Do you get that formula? If it were 400 pips, then you've got something like 4.5 to 1. So it'd be 4.56 or something like that. But it's always the difference between the entry and the exit divided by the risk, which is the difference between the entry and the stop loss. Okay. Happy days.
Okay. US market just opened up. Well, actually, John's just asking about how to get into the 2-minute brief. So the 2-minute brief is not on anymore. We're not doing the 2-minute. We've merged it. Yeah, we've merged it into this show. So this show will basically be the 2-minute brief from here on in. So rather than us, because what Jeff and I didn't enjoy doing was trying to give people levels and then not giving you the opportunity to understand the trade management. So we thought if we come back after doing the UK show to do a US show, then we can talk through how we're managing the trades from the US show and from the UK show. And then also if there are any new setups in the US show as well, because they're the two major sessions for us. When those two things, when those two markets open up, we tend to take most of our trade. So it's going to be this instead, if that will help.
And there's nothing worse than, say, at 1 minute before we end the show, we see a trade set up and we put the trade into the market, and then 30 minutes later we've managed the trade or micromanaged the trade and we've got out, at a profit, and then we come back 2 hours later or whatever, or tomorrow, the next day, and you guys are still hanging there like swinging in the breeze, and we've just made our money.
Yeah.
And the market's gone the completely opposite direction. So that's the reason that I hate trade calls for that reason on many occasions. If they're clear and the management is included in the trade call, happy days. But if it's, Ash and I trade a little bit differently to most people who provide trade calls, I think, in that, our analysis doesn't change, but if the market causes us to have a management issue, then that can be very, very difficult to get across to you guys unless it's live in front of you. So that's the whole reason.
Yeah, exactly that. US market has just opened up, mate, and we are seeing a little bit of a drift down at this moment. But are you pretty much covered for a little while? I just want to show everybody the screen while we're open here.
Yeah, as long as I've answered the questions, mate, absolutely. I'll have a squeeze while you're doing that.
Okay, if you could pass me the screen.
There was a system where we didn't have to do this. I wonder how that works.
We'll never get to the bottom of it, mate.
No.
So this is the down. In fact, let's look from the slightly from the top up. So on the monthly chart, this is the interesting point on the Dow. We can use the Dow or the S&P. We got to discuss COT report and seasonality at some point if we can as well in this session. So this area here is the first level, really the first closing level of resistance that the Dow is going to need to clear to get up to the next point, which is going to be up here. So when Jeff's talking about market structure, this would be the first point that I'd be saying, okay, if we get a turnaround here, I'd be pretty confident that we could take some shorts on and follow it down a bit further. And the S&P, if we just bring that up as well, I'm just going to analyze the Dow and the S&P. The S&P actually slightly different, but that would be probably the similar level on the Dow, but this is the first level on the S&P. So S&P needs to stay above the 2740 level really to hold the uptrend, the upside momentum. And if it's not able to do that, then we're likely to come down and test something down here. Now, whether we continue a big trend to the downside is the big question, but we are likely to ease back a little bit from this particular point. So weekly charts, the weekly chart is maybe showing us a bar that we need to wait for, possibly. The daily is the same thing. We probably need to wait for the end of today, which we'd probably want to anyway, just to let the UK market and the US, the European stock market come back online. And then if we go down to the 4 hour, which is really where the structure for me would stop. You know, I would take my entries off the hourly chart, but I wouldn't want to trade anything until these structures have started to break down. So we can see there's potential weakness on the monthly at this level. We can see that there's a weekly bar that that could end up closing below this point here, that 2740 point, and starts to probably encourage some downside, some bearish momentum to the downside. Daily bar we don't have yet either, so we might be waiting for the end of today. But if this 4 hour, which is the interesting one, starts to close lower, then we're going to start to sharpen our attention on, let me draw it for you, this coming down and testing. And that would be, you know, again, it would be a head and shoulders effectively on the 4 hour. But if that was to happen now, if that does sort of like have some sort of conjunction with that level, which it looked like it would bounce there, then as soon as we get through here, that could be a potential add point. But right now, we're not seeing that. So that would have to break down for us to even start being interested. Now, if it broke down, then we want to try and probably enter somewhere around about the 2740 to the downside. Yeah, the market's currently at 2750. So I wouldn't be trading the break of price because it may not break. And price is always more likely to hold than it is to break. So I want to see it come down, genuinely break, and then try and take it on the return. Yes, I'm bearish, but until I see that the price action genuinely turn around, I'm sticking with the momentum going to the upside, because we've still got this bar, there's still got this range here that we could get to before we start to see a pattern which turns around. But just look at the market structure, and it's, you know, it becomes a lot more simple when you analyze it on a longer term time frame. Not so much noise, but let's look at it. Let's see what's happened here. This is the lowest end here. Now, initially, that lowest end had to get through this level to say that we had a higher high, because it could have quite easily got caged in there. Now, when it came down, this area here initially was providing some support. You know, it tried to get bearish, unable to support, bang up to support. So that area does start the structural area for anything that would suggest that broke down there, we'd want to be out of the market. But anything goes above this area, we want to be long. So potentially we could have gone long here with a stop under there. Now this is really simplistic, but I'm just talking about the structure right now. Now, we want that area to hold. Now, what happened was this area held up okay. This is almost called a belt hold. The belt hold should really open at the low and close at the high, but it's pretty close. And the belt hold really gaps down and takes us pretty much back to support. And that's what happened there. So the belt hold happened, suggesting that there was going to be some further upside. And then we get really new structure. As soon as we see this low here, we get new structure. Now that's the low. Now we get new structure. So if we can get the structure here to say it's got to break through that area to take us down, and this area to take us higher, look what happens. It comes down. There's no resistance area here for it to go back and test at. So it comes down. Interestingly, that it did actually provide some resistance along that level, but still able to hold to the upside. Now, don't get me wrong, I was looking for downside here, but as soon as this holds and breaks through, then we have to start thinking, do we need to switch positions? Which is the point that I did switch positions here. Now we would be looking on the FTSE, but I promise you that they're pretty much identical. Now, as soon as we come up from that point and hit this high here. What I am then looking for is in exactly the same thing here, but in reverse. I want it to break down and then come back to my price point, because the price point is here. So where and we're always looking for the change in polarity, you know, for the structure. The structure holds bearish here. Resistance, resistance. Now, as soon as resistance is broken, we should be looking for this area for our trade. Not up here, not here, here. That would be the ideal spot. Now, if you enter here, which I think I did last week, I entered at the high here because, or nearer the high, because of the time of day and the news that was out. But all I'm going to do when I enter at something like this is put on a smaller amount, because what I'm really looking to see is if the market comes back, because it won't always test. And I wanted to go long. I knew I wanted to go long at that point. So I get one on here and one on down here. And the aggregate is around about there. So then the market pushes up again. And now we've gone through that level. So because this was previous resistance, we are looking to see whether this area will hold and continue that, because that is just the way that trends are structured. You know, so we're always looking for that structure. So this is a buy point until it breaks down. And if it breaks down, then we're looking for here to be our sell point. And then we can go short with stops somewhere at the highs, and then we should be able to follow it down. So that's when we're talking about market structure, what we're trying to do. And what you want to do on your charts is make sure whatever you are trading is makes sense with the time frame that you are trading it off. The FTSE and the Dow and the S&P look pretty good on a 4-hour. Now, if you go to the dollar yen, maybe you need to change to a daily to get some sort of clarity. But the same stuff happens here, and you know, this is the challenge, false breakout in a way. But look what happened really. The price came up. Now, as it came back to this structural point here, it went through, but it didn't take out this low. So if we had got in here, we bought there because prices have gone up, with a stop down there because that's the lower end of structure, we're still okay. You know, I don't know what that would have made before it started to really fall, but we're still okay. The market does come down, but it stays with inside structure, and then it starts to go in the opposite direction. So the structural points are really important, and knowing what time frame you're going to draw your structure on is all about knowing your charts and knowing your the instrument that you're trading. The daily and the 4-hour are points that the swing traders will use, and the intraday traders will go down to the hourly, half hourly, 15, and maybe sometimes 5 and 1 minute if you're feeling hyper adventurous. So you know, but the reason that people say a chart is a chart is a chart is because they all display structure. You know, whether they turn at certain points is more down to do with the longer term time frames, but they will all display this structure where you'll see resistance and you'll see support, and you'll always want to put your if you're going long, you want to see resistance broken and retested with your stop at the lower end of where the structure exists. But the way that you supercharge that and get better results on your risk to reward is if you're looking at this on a daily, and that's your area there. When this comes down to this point here, what we would then do is flip to a shorter term time frame and see whether we have what Jeff was talking about earlier, with maybe a higher low. So a small trend starting here on a short-term time frame. If we did, we can enter that with the idea that we'd have our stops there rather than down there. So on a daily, you'd have to have your stops at the lows. But when you come down some time frames, let's have a look at this on a 4-hourly. The 4-hourly is still trending down, still trending down, still trending down until we have. So we have to break that point. There's the last point of structure. As soon as we get through here, then we can enter, start to enter. We'd probably want it on return. So whether we get into this trade or not, I'm not sure. But we want to see this one turn around. Didn't really work out too well on the hourly, on the 4-hourly. Sorry, but let's have a look on the hourly. See if the hourly was any better to give us an entry. It's coming down. and what may have happened. We'd probably want that. We may well have entered here to the upside with a stop down there, losing that trade at 41 pips. May as well, might well have done the same here, losing that one at 38. But then we might well have done the same here as well. And that one's got 24 pips. So when that one goes, so we lose 2 effectively. And you're always going to be thinking 1%. But when that one goes, that one gives you a, what looks like, just from this particular picture, that looks like almost a 6% return. So it does depend on your, so an intraday trader might have looked at this and got a 6% return after losing a couple of percent on the way, so 4% up. Whereas a day trader, somebody that's trading on, not a day trader, sorry, a swing trader, might have entered here with a stop down there and only got 1-to-1, but they've lost nothing. So it really does depend on which way that you're trading, and when you start doing your analysis and when you start getting your journal, then that's how you supercharge your trading. So what Jeff and I would like to do is, when we step into the US show, is help you guys. This is the dollar yen. It doesn't matter. This isn't about the the currency pair I'm looking at. It's just about explaining about structures and stuff. So what we'd like to do is when you give us your journal, we can analyze for you. So if, for example, now if you were giving us your journal and you were talking about this, let's say we were talking about the dollar yen in our journal. Now what we want to do,
good pair at the moment, mate, looking
well, you're loving it, aren't you? You're loving this one.
Yeah.
So let me see. So if we were, let me see if I can open up a new one on top of my one. Now, the kind of things that we'd need to see. In fact, you might need to help me out with this, Jeff. But the kind of things that we'd need to see is, we want to know.
Can you open? There's a file in Skype that you should be able to open, and that'll be the exact chart we used this morning.
Okie dokie. From you?
Yep.
I've got Zoom.
Above that.
Above Zoom. Okay, hold on.
Doesn't sound like it's there.
No, I haven't got that one, mate.
Stone the crows, mate. What's going on? Okay. Let me fix that.
Now, it's really important for us and for you guys to not only do this, but to analyze it. Now, the best time to do the journal, I try and do my journal at the end of each week. You can do them every day, but the reason I like doing it at the end of each week is that on a Saturday or a Sunday or even a Friday night, the market's closed, so you can have a look over your trades for the week and kind of have a look to see how you traded. I could show you my journal, but it's got my specific indicators on it, which I teach on the Master Trader program. So I can't give those away, but I certainly will give you the idea of what you should be doing at your particular stage, because it will be just as valuable. There's no point really. My one won't be of huge value to you, but I will tell you what kind of things that I'm interested in, and I want to know. It doesn't matter what order they go in, but the first thing I want to know is the date.
It's there now, mate. If you want to open it.
Okay, great stuff. Great. All right, let's have a look. Oh, here we go. Great. So the date, was it a buy or was it a sell? I tell you what, so with this one, actually, perfect. Let's do this. Let's get rid of that. Don't need that. Let's save that. So now with this one, what you want to do, obviously change the name to whatever else you've got. and have your, actually maybe not there. Let's do it here. So in number 2, let's have the product or the instrument. You can call it what you want. These things. So let's say the product was the dollar yen. Now, it's really important to note down the products, because what you and there's going to be a time where you will get your win, and the product will help you when you can analyze, how many dollar yen trades did you have in comparison to how many wins you had with that particular market, that product. That already is going to put you in a better position. If you know that you perform better going long, and this is the kind of thing you want to know. If you know that you're better on the dollar yen over the Aussie CAD or something, it's a great thing to know. If you also then go in even further in and know that you're better off going long with dollar yen, your win rate percentage is better with a dollar yen going long, then that's when the dollar yen sets up long, you want to be kind of like putting a bit more money onto that one. You also need to know which strategy that you are trading. So the date, the products, the buy, you buying or selling, you enter your stop loss, and your exit. Now you want to sort of like analyze your strategy and analyze yourself. So you want to do all this sort of stuff, and it doesn't matter where you put it. I don't know where would you normally put your strategy here, Jeff? Mine is
I'll write at the end before the image is where I put it, probably in the comments.
Okay, so let's do it here. That's fine. We can have a whole strategy section. So let's say you're trading, and I'm going to make one up because I don't know who's listening. So I'm going to make one up, and it's called the what was the one that Alexis called it earlier?
Hamburglar.
The Hamburglar, right? It's called the Hamburglar. Okay, so the strategy is the Hamburglar, and in actual fact, sorry, you want to list that as strategy. So have your strategy, call it what you want, a Hamburglar, an HB. And now after that, what you want to do is tick off the elements of the strategy that that were there. Because what you might find is that you take a trade, because you're not going to trade everything completely robotically. You will eventually, but until you've done this, you won't. But what you'll find is, let's say that part of this strategy needs a head and shoulders. So part of the Hamburglar strategy needs the head and shoulders. So you're going to be putting the elements of this in it. So if it needs the head and shoulders, then you'd have the head and shoulders on there, and you'd say yes there or no. So you want to know what it was, all the aspects of the strategy, head and shoulders. Let's say 2040 EMA cross or something. Now the reason that you may not trade it is because it might be close. Sometimes you'll take a trade where the things that you want to see are almost there, but they're not quite there. So the 2040 EMA cross, was it there? No. So let's say it wasn't there, but it was close. Then you'd want that in your comments box at some point. Now, the way you want to analyze yourself is to make sure that you are saying that you are putting down your timing. So when you put down your timing, or when I put down my timing, I'll put down it's really good or bad. Your time is either good or bad. Now let's say it was bad, it was poor timing. Then I want my reason early. So was there a better price I could have got? And I want to sort of tag that on. So I want to really analyze everything about the trade as I can. Afterwards. So if this said no, if we had no, what was the correct entry signal? So what was the correct entry? And maybe it is wait for EMA. Wait for 2040. So we can really get a lot of detail in here. Now, as time goes on, there's going to be things in here that you don't want. But initially, you want to write down everything. Write down everything you can, where you got in, where you got out, how did you perform? Did you take profit in the right area? Were you a little bit early taking profit? Was it better to take profit on, let's say you've entered this one short. Is it better to take profit here on the daily, on a price point? Or does it end up being better? So these are the kind of things that I'd also want to know. Is it better to take profit on the price point, or is it better just to slide down your stop loss on an hourly? So it comes down again, comes back up again, and then we got a stop loss here. Because what can happen if that was the case, you know, if we're trailing the stop, if we're trading price stops behind the price, then that gives us the opportunity to not have to take profit here. It could keep going, and that means we get the best out of the trade. Would it have been better to take half off here and keep the other one trading? Is it better to add? You know, where are the add points? There's a lot to know about the trade, and the more analysis that you do on your trade, the better you will become, because you'll really understand how to trade and how you are trading.
Patterns will begin to emerge on that spreadsheet, guys. You'll see after a time feels, oh my God, why do I keep trading that? I just lost 3 times out of 4. That's ridiculous. Yeah. Why would I do that? And you can't possibly remember that. You've got to commit it to a journal. You really do.
Exactly. So I'm hoping that helps a bit. And as I say, what Jeff and I'd like to do is for you guys to send your journal in. Now we can, it means that we can have a look through your journal. We can maybe even tidy up your journal, you know, a little bit, and sort of say, okay, let's take out this, add this, and also we can actually see where you are trading, and then we can see what mistakes that you are, you know, genuinely making. Because the thing is, if you can also put stuff in about what your entry's like, and it is poor, and it's poor again and poor again and poor again, you're going to start to recognize that there's something wrong psychologically with your trading. Why are you getting in early every time? You know, if you've got a fear of missing out, and does that fear of missing out start to, when it's there in black and white, geez, I get in early a lot. I'm not waiting for the pullback, or I'm not waiting for my 2040 cross. You know, I'm not doing that enough. And if I had done, this is the results. Now, in fact, incidentally, on top of that, what you want after it is what would have happened if you traded the trade purely according to strategy rules. Right, so Ravinder's now asking how we're going to get the sample of the journal. So that's our job now, isn't it, Jeff? Yeah,
we're working out, Ravinder. We're not great on IT, but gee whiz, we've got a team behind us who we'll ask questions of, and they'll say, oh yeah, here's how you do that. So yes, yeah, we'll work it out.
I mean, it might be just something simple that we start a little Skype group, so all the people that are in the US session, and we do things that way.
Yeah, maybe that's it.
Might be something as simple as that, but we'll see. We will figure it out. We will figure it out, because I think it's going to be important to get this sorted out. Well, the dollar is weakening currently. Gold is also just coming off a shade. So as the dollar weakens against some of these other currencies, you know, this is a nice example actually. Look at the pound here. Look at the pound. And now the pound structure, I'm going to bring this onto a chart with a bit more information. Right, the pound structure is here. We got the daily pivot here. We got the weekly pivot down. We got the daily pivot here. Sorry, weekly and monthly pivots there. Now what we want to do is scribble everywhere we can on our chart. Make sure that we have got every single line that we possibly can covered. Low, through, right, there. Now all of a sudden, this area looks incredibly attractive for a trade. While this holds up, this looks like a great area to take a trade. Now, not only do we have that, but we also have some structure here. That was previous resistance right there. Previous resistance has got taken out early doors this morning. So as it coming back here, this becomes a really good point to start looking for a trade. So while Jeff was talking about lines and structures and everything else, these are the kind of things that we need to be doing and need to be knowing. Now, if this runs alongside our strategy, then we can start to get really interested in this stuff. You know, we can start to take these trades, but we want to be scribbling everywhere, really, don't we, Jeff? I mean, it's one of those things that you might find lines like, you know, I generally speaking, I like to have a lower and an upper line. So if I was going to have an upper line on this as well, what am I going to have? There's a level there. There's a level there. Let's get back in there. It probably is the same sort of line there. That's okay. Let's bring that there. Right, so we got a rising wedge. Let's just take this away. Now that doesn't take much work, really. And I don't know whether you'd be in agreement with this, Jeff, but that looks to me like a rising wedge.
Mate, interesting. And I always love this part of analysis, because we each use different lines, and we will oftentimes come to exactly the same conclusion and potentially even very close to the same entry, but in entirely different ways sometimes.
Yeah.
I don't use your top line as unless it's a parallelogram or a channel, a definite channel, because I like to use, as you know, repetitive touches both sides. Now I know you've got that, but unless it's parallel, it really doesn't come into my calculations. So I don't recognize a rising wedge or a falling wedge or anything like that.
Right.
Interesting though.
Yeah.
Maybe I should. Maybe it provides more opportunities, because it's the same principle. The principle is exactly the same. You're bouncing off something. And if you're bouncing off something, then what? Hey, hang on a minute. It's going to bounce there. Shit, I can make some money off that.
Yeah. Well, this is the reason I like this line in here, this upper line, is this is a bearish pattern. While price is going up, we want to be long, but what it does suggest is if it breaks down, we may well have quite a bit to travel. So we can go long, because the long side, that brings us right the way down to this area here. It brings us down to 122, maybe 123. Yeah, probably about 123 from 125. So a couple of hundred pips down. What we can go.
Everyone in the room is going to hate you, or everyone that's still in this trade, of course. We know
well, well, at the minute it's going up, so we don't need to worry. But it could even come up to this level here, maybe even hit the upper line. But if it does start to squeeze along here, then that's going to suggest that we do fall out. Now, if we break to the upside, we do the same measurement long. But this does tend to be a bearish pattern. So we'd be looking to see whether if it does turn around. If it does turn around, then we could look down there. But certainly right now we'd be looking long. We're looking long here. The structure exists down here. So and so does the trend line as well. So we can put stops at the lower end of the structure, or even maybe, I don't know, probably wouldn't want it in between the daily pivot and the price action, but that's gonna still hold. So the price action to the upside still holds at 124.30. So entering at this particular point, we need to be aware that that's where the lower end of the structure lies, and it needs to break that lower end to turn into a downtrend. Otherwise, the uptrend's still in existence. But yeah, I don't know where. Hopefully that does cover a bit of stuff. Zoom apparently will give us access to a lot of users to join, so we could possibly use the Zoom thing. I guess we just have to put in a
Yeah, we're
question
aware
to.
of that, and that is certainly a possibility. But we'll throw it around with the guys who tell us what to do, basically, in terms of technical productions. So yeah, look, definitely a possibility, and we will be able to do something along those lines. I'm absolutely sure. Mate, we've got to kind of rack off very soon, but there are a few questions about currencies I just want to very, very
Sure.
quickly go through if you're done, but well done.
Yep. All done.
Okay, let's start with going back to Jimmy. G'day, Jimmy. Jimmy on the daily chart is looking at Swissy yen and Euro yen for a sell tomorrow. Swissy yen sell tomorrow. We might have missed the boat, Jimmy, on that. By the look of it, just have a look at the daily chart. That is the daily chart. It's kind of shot through already, but look, I've got to say I'm actually got a bias in the other direction. But it looks like the yen has kicked a goal or two today, and I'm not entirely sure why. I read the yen as particularly being a bit of an issue because of what I heard last week, which was that Shinzo Abe was SH1T himself because they kind of didn't have any money to bail the country out of the looming economic crisis, aka COVID-19. But it doesn't appear that's the case at the moment. So the yen is looking rather strong on the charts at the moment. But I hasten to add that we are in an illiquid situation currently, but very difficult to argue against the triple top and the lower high. So I don't have an issue with that. And what I would probably be looking for, if I were to trade this short tomorrow, would be, let's just extend that range a little bit, would be a retest of the weekly pivot and the monthly pivot, which would coincide with the bottom of this recent range that we've now just broken out of. So if you're not in it already, and if you are, it looks like you might be on a good one at this point anyway. Maybe a retest here does get me interested in the short. I think I've got better pairs, to be honest, because this is now getting a little bit confusing to me because of the bias that I have against the yen. So Euro yen, let's have a look at that daily chart.
Just on that really quickly, I really like that personally, Jimmy, as well, and I'm with you completely. I think we should be looking at tomorrow. I wouldn't want to look today. I think that one is already traveling, and what I'd want to see is the same as Jeff. If that pulls back to the weekly or monthly pivot, I think a short is well and truly on there. Then you've got a little area at the highs to put your stops at, but I think tomorrow will be a great time to go in with that personally. So I like it. I like the Swiss yen for a short 111.80.
Yeah, look, I looked at this last Thursday, I remember now, and looked at that candle there because one of my favorite plays for the lower high is to use a bar that isn't bearish. And although if you know how to read that bar, that bar has worked its way and it's done a hell of a lot of work to get to this resistance level. It's done a hell of a little bit more work to get through that resistance level, and then it's failed. And I love that when I see that. If that was a bearish candle like this one, then I wouldn't be interested in trading it. But if it's got a bit of a bullishness about it, and the market reads that as a bullish candle, that's exactly what I like to see, because it does give me the opportunity to get short underneath it. And if the bulls are serious, they will go higher. And if they're not, then the opposite applies, of course. The reason I wouldn't have taken that trade is because of the exact things we just spoke about. The monthly pivot was in place. The weekly pivot was below it at the time. But the monthly pivot being there below me and I'm trading straight into it is not a good thing. Daily chart gives you some chance to get through it, but it would have been a no for me. This changes, however, with this bar. Tomorrow, it'll be difficult to trade that bar if it remains as it is. But on the 4-hour chart, if it comes back here, then you've probably got an opportunity to get into that if you're not in it already. So that's Swissy yen. Euro yen's exactly the same scenario. Difference here is that I do have a structure, and the structure is twofold. And like I said before, very similar to pound Aussie, the biggest part of this structure is probably the trend line at the moment, because it's stronger than the range that we're in. So what I see here is the break and retest of that trend line and potential here to go short. Yep, definitely got it. And the bottom of the range tends to make me think, before we get short, maybe we've got a little bit of a bit of buying to take place first. Maybe that's it there. Maybe it's all done, and we're on our way. Very, very difficult for me to trade this at the moment, I'd have to say, because I am at the bottom of a range, and I would be looking for a higher low to go long at this point. But definitely the longer, the bigger picture, if you go to the monthly chart, is telling me that this will go short at some stage. So I'm certainly not disagreeing with you. Euro pound, I've been trying to get back into euro pound, and it's doing exactly the same thing. It has broken the little bit of a structure that we've got here. I won't say I'm desperate to get back in, but I withstood the temptation last week to trade this bar here, and it took all of my won't power not to trade it, I've got to say. It looks like I may have been wrong at this point, not trading that, but I saw this untested monthly pivot above it. So I know it's early in the month, but I just had this feeling we were due for a bit of a retracement here rather than just go straight down. Maybe that's enough. The pause is enough. Certainly it looks that way at the moment. So would I be willing to get back into this? Maybe there was an opportunity there in that bar, but I'm still not convinced that now is the time for me to go short. I have made a good profit on this in the last 3 or 4 weeks, and I would like to get back into it, but I'm still seeing the monthly pivot, so I'm kind of waiting on that to happen. If I miss the next leg down, then so be it. Life is still worth living if that's the case. The Aussie pairs, somebody was asking for the 4-hour charts on the Aussie pairs. Look, I'm a massive bull, the Aussie pairs at the moment. The yen being strong tonight is giving me not hesitation, but like all things, when we're at a resistance level, I like to see it retrace and go to a support level. And at this point, that looks to be the weekly pivot to me. That coincides with the breakout of this last range, if you like. So I definitely see that as a buy zone here. At the moment, it's a little bit tough because we are at that resistance area. So I'd be passing on that if I'm not in the trade already. That's Aussie yen. Aussie Swiss looks to have broken the highs here. In fact, it doesn't look to have broken the highs. It has broken the highs here. So that becomes a simple formula for me now. Do I get a retest? And can I trade if that is the case? Yeah, difficult, I've got to say, unless it's a big bar that comes down here and tests the weekly pivot. Reason, I do not trade above DR2, so I won't enter the market anywhere near DR2. And if I have to enter above that candle, I'm bang on DR2. And for that reason, I'd have to let that one go. This is very much a case of testing your patience. And sometimes it'll get away on you and you'll miss the opportunity to get in. But more often than not, you will find that if you stick to your rules and the rules say I can't go long here, then you'll get a second opportunity to get into that position. And maybe even it'll save you from a bad trade. And that's kind of something that I'll show you guys at some stage. If you're trading on small intraday charts and you're expecting price to go through DR2 in a single bound like Superman, it's not a good idea, I can assure you. So waiting on a pullback on pretty much all the Aussie pairs at the moment, but it does look like they have broken through and given us new highs. Certainly they'll be doing that, but to trade it, I've got to see it pull back now. And that goes for just about every single Aussie pair at the moment. But gee whiz, we're looking good here. I think the analysis that we've been able to produce on the Aussie is now coming to roost. And I think we have we have turned the corner here, but very, very difficult to trade in a straight line upwards. You've got to wait for that retracement to come back now, I think, and that's what I'll be doing. So weekly pivot looks to be, to me, the key to trading Aussie pairs this week. And certainly if we get a pull back to the weekly pivot, that it won't be a matter of will I, it'll be a matter of which one or which ones that I trade. Of course, remembering that we are still short pound Aussie and euro Aussie, so and totally at no risk in those. We could clean up on the Aussie here if it goes our way. Simple as that. So there you go. That's my thoughts on the Aussie pairs on the 4-hour charts. I'm waiting on pullback, and as I say, the Euro Swissy short. Euro Swissy. I don't think I've got a Euro Swissy chart up, have I? Looks like I don't. Okay, very, very briefly. Euro Swissy. Okay, Euro Swissy seems to me to be range bound at this moment. I do see a descending triangle sitting there, which is interesting. I'll point that out. So even if you came from the top here, don't quite have a nice pole sitting there for us, but that to me is a descending triangle. But further than that, inside that structure, I definitely see a box range as well. So point being that we're at the bottom of both of them. And the further point being, because I don't trade short at support, I'd be looking for this cross to break resistance as always and come back underneath there and give me the method of going short, but I'm still at the support level. So that's not an issue, not an option for me. What I'd much rather see is go to the top of the other structure, which is the rectangle, and then break resistance, as always, break resistance or bounce off it, one or the other. Bounce off it, break it, come back underneath it, put in the higher low, sorry, the lower high, and that's when I can enter the market here, not here. Not saying it can't go. That's not what I'm saying at all. What I am saying is this is extremely low probability trading here at high risk. This is low probability at low risk. Sorry, high probability at low risk. There's a massive difference in trading short off support versus short off resistance. Massive difference. In fact, I'd love it to hit the monthly pivot, then do exactly that. That would be a good way to trade. As I said, not saying can't do it, but what I am saying is it's not a great method of trading for me. If it works for you, then happy days. That's all that counts at the end of the day. What are we? One more? Okay. One more is CAD yen. Oh, still Jimmy again. Daily CAD yen sell tomorrow. Didn't we go through that? CAD yen. Let me get rid of my eraser. CAD yen. I've got to have a CAD yen chart here somewhere. Surely. Don't call me Shirley. Looks like I'm about to be taken out of that trade I was in. Only got a TP1 out of that one. So short. I guess the same applies, Jimmy. What I've got here is a structure that has been re-entered, not only re-entered once, but re-entered for a second time. For that reason, I'm bullish at this point. What would change that for me is if the monthly pivot and weekly pivot, as is the case at the moment, would have a close below them and then a retest. That's probably the only thing that would change my mind here. at this point, that looks possible for tomorrow. So on the 4-hour chart, if we were to remain below here, say get a close down here somewhere, and then retest those pivots, then that gives me the opportunity to trade short as a break and retest of not only the pivots, but the bottom of the range. You can see that we're willing to try down here. There's no question about that. And in many regards, we've got a box range sitting underneath this box range, and we're at the top of that. So yeah, I'm a fan. I'm a fan if we get a close here, down here somewhere. But if we don't get a close, in particular on the daily chart, if we don't get a close below the monthly pivot, then my bullish bias would remain. And that's the way I would stay. But key level, we're definitely at a key level here today. I think we're done. You still here, Ash?
Yeah, I haven't gone anywhere.
He's still here. Sorry, I was rattling on there for a while, going through all the currency pairs, and I hope that helps you guys.
Oh no, that's all good, mate. S&P breaking down slightly. Interesting. Someone's asking earlier about the earnings season, and it's going to be front and center, isn't it? So I do think that if this market is expecting some pretty poor numbers from the earnings season, then we may well ease to the downside from this particular point. So S&P is actually attempting to break its level of support, so we may well see the weekly pivot on the S&P, which does get me interested for some genuine tests back up again for some downside. So let's watch out for this, because S&P at the weekly pivot certainly would be below the weekly pivot would certainly be a short, but we are right on the level now. 27.30 was my short area. Now I want it to go through here and close beneath, and with some,
we can't see. Do we need to see this?
Oh yeah, we may as well have a look, have a quick look. I don't want to hold everybody up, but if you could give me the screen, that'd be great.
On its way.
Fantastic. Yeah, so we're just seeing the S&P just a bit under pressure here, and you can see left shoulder. There's the head. There's the right shoulder. So this is an hourly chart. So as I said before, not all that significant, and it does look like the lower end of the structure is around about the 27.12, 27.13 level. So that does suggest breaking the weekly pivot, and with a retest could be of interest for some downside. But
boy, this weekly pivot's in for a pizzling this week by the sound of it. I've just
said,
I've got to see price back until the weekly pivot on about 6 crosses just then. So
yeah, well, I think you're right. I think you're right, mate. I think it is going to take a bit of a piddling, as you say. So could be of interest. And actually, just looking at this as well, this is only on. This just doesn't give us the information we really need. This is an hourly chart. So when we flip this to the 4-hour, we are really on top of it. We're right on top of where price needs to hold. So if price does start to come down, maybe even testing the monthly pivot and comes back up to the weekly pivot, that is going to 2,700. It looks like a really good point to go short, but we've got to see it come down first. So let's have a look. I mean, I think Jimmy might be making the most poignant point about timing. I think looking tomorrow could really give us some opportunities to flip this market on its head. So I am certainly looking to see whether the market does actually behave in a specific way today, and that means going, if it does sell off a bit today, because if it rallies at all tomorrow after a sell off today, I am more than interested.
Yeah.
And
tomorrow's going to be very interesting.
Yeah, it will. Okay, well let's wrap it up. I want to just finally put a chart up of WTI. WTI, same kind of thing. Looked at this on a 4-hour. There's the 4-hour hold. It's broken through that particular hold. So this area now is for this is for the bears to come into play. The reason I wouldn't be interested in this is we've had that OPEC announcement, so that puts me off. Now it doesn't mean that we don't have a technical setup for some downside, because we do. Especially through the daily and weekly pivot, we do have some setup for the downside, but that OPEC situation does put me off. So I'm going to wait on oil and see if there's a clearer picture, because I think now with what we have seen is a huge indication of motivation at this price point down here. So it comes back down to 20 again. Are we going to see some further motivation to try and get the price back up again? Russia have now swallowed their pride. Obviously, we saw the States kind of and Donald Trump kind of get involved when the price was getting to a ridiculously low level. The Chinese came and bought a load of capacity in as well. So I'm really looking for oil to turn around. The fact that it's coming lower is great. It just means that we're looking for a higher low in a different area. But let's see if this area does actually turn around again. Because if it does, price gets above the daily and weekly pivot, we are looking at the long at that point on an inverted head and shoulders with the left shoulder and the right shoulder. Sorry, the left shoulder here, the head down here, and the right shoulder here. So this is where the right shoulder does become of interest for anybody who's asking earlier on. Doesn't look good now, but it does, because it does need to get through some levels. But we want it to break through, and if it does, then that could be a long setup as well tomorrow. So let's come back tomorrow, mate. Did you manage to think of what we can say at 2 o'clock?
Not yet, no. Been too busy on the other job that we had between sessions.
Oh gosh, yeah. Do you want a quick chat or?
Yeah.
Go?
Just
okay.
Quick one.
Great stuff. All right, guys. Well, we will bid you bon bouche and be back tomorrow, same trade time, same trade channel at 8 o'clock.
That's the date. Don't be late. See you guys.
There's going to be 5 to 8.
You deal.
See you guys.